Okay, guys, if you can hear me and you can see my screen, type in one in the chat box. Type in one in the chat box. Great, 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 great. Awesome, 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 awesome. Awesome, 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 awesome. Okay, welcome to Forex Made Easy with K Show. If you're excited to be here right now, drop in the chat box your name and where you're watching from. Come on, drop in the chat box your name and where you're watching me from. Come on, guys, let's go, let's go. Let me know those who are here. Let me know those who are here. If you're excited about this, drop in your name and where you're watching from in the chat box right now. Okay, 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 okay. Awesome, awesome, awesome. Awesome. Wow, wow, wow. I have Malachi from Abuja. I have Oluwadaisi. Oluwadaisi didn't tell us where you're watching from. Latif, you didn't tell us where you're watching from. Love Day from Port Harcourt. Hey, PH City, how you doing? Okay, Ajayi from Ikorodu. Good to have you here, Ajayi. Akin Shete Ibukun from Ogun State. Woo! Good to have you here. All right. Oluwadaisi said from Jalingo, Taraba State. Woo! All the way from Jalingo. Latif from Lagos. Good to have you here. You know, Lagos guys are always turning up in mass. Ekundayo Sheyi. Tell us where you're watching from, Ekundayo Sheyi. Anoshike says from Lagos, from Prayer City, Ogun State. Woo! Ekundayo, fantastic, fantastic, fantastic. Ekundayo said he's not hearing me. Oh. If you can hear me, others, if you can hear me, please drop in a 1 in the chat box right now. Drop in a 1 in the chat box right now so I can move on. Okay, come on, drop in a 1 in the chat box. Oh, fantastic, fantastic. So Ekundayo, I think it's from your hand. You have to just, find out what's going on right there. Okay, so let's go straight into it. All right, my name is Gabriel Showale. I'm popularly called K Show. Most of you already know me and who I am. But for those who are watching me for the first time or listening to me for the first time, all right, you're the reason why I'm doing this introduction. All right, I'm Africa's most sought after digital marketing consultant. Okay, and we run a full-time, digital marketing agency right here in Lagos, Nigeria. Okay, and recently we've spread our wings into 4 parts, all right, 4 subsidiaries. So we have the K-Show Digital, which focuses on digital marketing, helping companies build their website, helping them with their SEO, email marketing, running ads on Facebook, on Google, on YouTube, on Instagram, a full service digital marketing agency. And we have K-Show University, which is why we are here today. All right, K-Show University is the subsidiary of K-Show Concept that deals with trainings. All right, so we empower people, we impact lives with our training. We do trainings in digital marketing, we do trainings in graphic design, video editing, motion graphics, we do trainings in web development, and of course, we do trainings in Forex. All right, we have K-Show Properties, which is our subsidiary that deals with real estate. All right, so we help our customers, our clients to make smart comes to buying real estate. All right, and then we have K-Show FX, which is a part of K-Show Concept that deals with trading Forex for our investors. Okay, so for those who are interested in saying, hey, I don't even want to learn what Forex is all about, I just wanted to help me trade. All right, that is what K-Show FX does for you. All right, so enough said, let's go straight. into the next thing. So we've trained over 3,000 people over the years. All right. In my mind, I know that it's more than this 3,000, but let's just put 3,000 there. Okay. And, we've trained them in the areas of digital marketing, all of these things I said before. All right. And we've done our training in different parts of Nigeria, Lagos, Abuja, Port Harcourt, Onitsha, Akwa Ibom, where else again? Ibadan. I mean, so many places. We also host our trainings in Accra, Ghana. So if you're here from Ghana, come on, drop in a fire emoji in the chat box right now, because we'll be coming down to Ghana next month live for the Adobe Masterclass. That's the training for graphic design, video editing, and motion graphics. Okay. And we've had people from Sierra Leone, from Benin Republic attend our training right here in Lagos, Nigeria. I mean, guys, it's been an amazing journey. Next month, March, by March. So next month is February. I'm already in February like this. As in, so by March, K-Show Concept will be 5 years. So we've been doing this, straight for 5 years. We're going to do this for the next 50 years. If you're happy about that we're still going to be here 50 years from now, come on, guys, drop in a 2 in the chat box right now. I mean, we've impacted a lot of lives and we are not going to stop. There's still more lives to impact, right here in Nigeria, West Africa, Africa, and the entire world. Okay. We also do corporate trainings. All right. So apart from the fact that we do, the personal trainings where people come to our office, or we've trained people individually, organizations do invite us to come train their staffs, or their members, if it's an association, or their employees, or maybe it's an NGO that's trying to reach out to the community. So organizations like this do talk to us, okay? And when they do, we are always happy and delighted to train, a group of people or a group of staff or an association in any of our training, whether it's digital marketing, whether it's, graphic design, video editing, Forex training, whatever it is. And, some of the people we've trained includes CBN, FIRS, NMPC, DPR, and members of AppSync. We've even trained the media team of Covenant Christian Center. I mean, and a whole lot of lists right there. All right. So I'm glad to be here. If you're glad to be here too, I want you to drop in a 5 in the chat box. Come on, guys. Give me a 5 in the chat box if you're excited about this training. You're super pumped up about this training. You can't wait, to get the massive value you're going to be getting from this training. Drop in a 5 in the chat box right now. Come on. Whoa, the 5s are rolling in. Wonderful, wonderful, wonderful. So let's get straight into it. Awesome, awesome, awesome. So my journey into the Forex trading, space. What led me into the Forex trading space? So, I mean, 4 years ago, I was not even interested in Forex. And, I was not even interested in my life, and so in life there are 3 M's to there are actually 3 M's to wealth. If you guys know the 3 M's to wealth, please drop it in the chat box right now. If you know the 3 M's of wealth, please drop it in the chat box right now. There are 3 M's to making wealth in life. Come on, if you know drop it in the chat box right now. All right, let me see some financial education students right here. 3 M's to making wealth. All right. This is one of the things that led me into, trading the Forex market. All right. Nobody knows the 3 M's of wealth. 3 M's of wealth. 3 M's of wealth. All right. So if you don't know, I'm going to tell you today. All right. Money. Money. Type make money. Number 1 M of wealth is make money. Everybody type in make money. My class is always interactive. All right. So in my class, I'm not just going to be talking. It's going to be as if you are in a physical class. So if I tell you to type in something, you better start punching that your keyboard. Okay, fantastic. Make money, make money, make money, make money. Awesome, 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 awesome. And in my class, I can see all the participants here. If you are not engaging, if you are not participating in this class, I can remove you. Okay, so because this is a class, because if I was seeing you physically, if you don't answer my question, I will flog you with cane. Yes, go and ask my students. Okay, so even if I can't see you physically, if I tell you to do something and you don't do it, my flog is to remove you from the chat. All right, and that will be your punishment. So listen carefully now. If I tell you to type anything, you better type it. All right, so fantastic. Make money, make money, make money, make money. Ekundayo, I don't know. It's from your side. Let me type it for him. It's from your side. Okay. All right. So, like I said, the 3 M's of making money. Some people have already dropped the 3 M's in the chat already. So number 1 is make money. Number 2 is manage money. All right. And then number 3 is multiply money. All right. So I was in a stage in life whereby I had, made money. I had tried to manage money. Then the next question that came to me was, how do I multiply money? Because if I have, 10 million in my account and the 10 million is still 10 million tomorrow and 10 million 1 month after and 10 million 3 months after, then it means that actually that money I'm saving is not growing. It's actually diminishing because by 6 months later, you will just hear that inflation has hit the market again, and all the prices of all the goods and everything is gone up again. And then your 10 million is already having a value of like 8 million. Okay. So the next question that came to my mind was, how do I multiply money? And one thing that answered that question very well for me at that point in my life was Forex trading. All right. So I discovered, with Forex trading, I can actually multiply my 10 million naira into, maybe 30 million in 6 months. All right. Adding an extra 30% to it while the money is growing, instead of me just leaving it in the bank. All right. And in my journey of finding this out, I also noticed that 10 million I'm actually leaving to the bank to hold on to, they are actually also using that same money to go and trade in the Forex market. All right. So they take a huge sum of it, trade in the Forex market. They take some part of it, give it to Dangote to go and borrow. All right. They take some part of it, give it to some other people to borrow. And within that 6 months, with my 10 million naira, they've already made, another 20 million naira with it. While me, I'm happy, at every month, they just send me a lot of, 5,000 naira, interest capitalized. I say, 5,000. Meanwhile, the same money, they've used it to make 20 million naira. All right. So in case you don't know, today, this is what the bank is doing with your money, guys. They're trading the financial market. And you also want to make sure that you are doing the same. All right. So why is it that when we borrow bank money, why is bank not just keeping it and saying, well, let's not touch his money, so that the day he needs it, he'll be able to withdraw his money. Let me tell you one shocking thing today. How many of you know that if all of us in this world, all right, all of us in this world, if we decide that we want to withdraw our money from the bank today, how many of you know that the bank actually won't be able to pay everybody? If you know, type in 1 in the chat box. If you know, type in 1 in the chat box. Okay? How many of you know that the bank won't be able to pay all of us? Fantastic. 1, 1, 1, 1, 1. So for those of you that don't know, it's actually very true, because immediately you are dropping that your money into the bank, all right, they are immediately taking that money out and going to multiply that money and then return the interest to you and say this is your own part. All right. So material says because they've invested your money. Yes, they invest the money. How do you think they pay staff? How do you think they open branches and how do you think they sponsor different adverts and different businesses? It's because they use your money to multiply more money and gain more money. All right. So that is why the bank will always be happy and say, if you do fixed deposit, we will give you higher, interest rate, because they want you, the goal is they want you to leave that money with them. They don't want you to withdraw it. All right. So today, by the end of this training, okay, you guys are going to go and withdraw your money and say, okay, oh, thank you, Mr. Bank. It's time for me to start multiplying my money by myself. Okay. And then if you feel like saying, let me just dash bank small money, you can just carry small out of it and go and save it and say, yeah, bank, just keep this one here. All right. While you are multiplying your money in the Forex market. Obatunde says, let me go and withdraw. All right, calm down. Learn the strategy first. When you learn the strategy, you're not going to withdraw your money. Okay. So my goal for this training is to take you from zero to pro in Forex trading. All right. My goal is to take you from zero to pro in this Forex. So this training is for 3 days. All right. It's for 3 days, even though it's free. All right. It's for 3 days. And you're going to be gaining massive value from this training. So you want to make sure that you hang around day 1, you hang around day 2, you hang around day 3. You don't want to miss any of the days. All right. Very, very important. So what are we going to be learning throughout these 3 days? I'm going to be introducing you to the Forex market, even though I know some people are here that already know, what the Forex market is all about, how it works and everything. But there are some people here who don't know jack about it. All right. If you are, someone like that, type in 5 in the chat box. If you know that, hey, man, I don't even know anything about Forex. All right. So I'm starting newly. Dropping 5 in the chat box right now. Awesome. So you can see that was actually correct. Okay. So for people like this, we have to go from foundation and go straight all the way to, some people are typing 5 and 6. Chronicles International, which one is 5 and 6? It's like, is it 5 and 6? Like, you don't know, no at all. All right. So don't worry, I've got all of you covered. Okay. We're going to be going from foundation, and by day 3, you guys are already going to be placing trades. If you're excited about that, come on, guys, drop in a fire emoji in the chat box. I mean, this training is going to be engaging us. We're going to be engaging ourselves. So if I tell you to drop, just start dropping. Okay, dropping a fire emoji in the chat box right now. Awesome. So we're going to be talking about the introduction to Forex trading terminologies. Those are the words you need to understand about Forex, how to calculate profit and loss, very important. Market analysis. We're going to be talking about how to get a Forex broker. We're going to be talking about Forex trading application to use, how to place and manage a trade, Forex charts and how to read them, how to use Trading View. And guys, the last but not the least, the money-making Forex strategy. Guys, trust me, you don't want to miss any day in this training. All right. So, by day 3, I'm going to be talking about the money-making strategy. You don't want to miss it. All right. So don't go and say you join by day 3. By day 3, by the time I'll be talking, I will not be talking as if I'm talking to learners. Okay. So day 1 is for clearing and bringing everybody who is still new to Forex up to speed. So you want to make sure that you don't miss any of the days, because I've planned it in such a way that if you don't miss it, everything I'm going to be teaching you is going to look so simple to you. That's why this training is called Forex Made Easy. All right, that's my goal. I want to make it as easy as possible for you. Okay, so let's go straight into it. Now, no distractions, guys. No distraction. This is a class. All right, some of you, because it's Zoom meeting, you will just open your phone, be in the meeting, but you'll be doing some other things. You're going to be doing, playing with people, watching TV, doing all of those things. In this class, guys, you don't want to miss any part of this training. No distractions, all right? Give it all you've got. Don't forget to take notes. It is super, super important, okay? So let's dive in. Started officially now. So what is Forex? Okay, what is Forex? It's the global financial market that allows one to trade currency. It's as simple as that. Okay, it allows you to trade currency. So what we do in the Forex market is we trade currencies. Okay, Now, guys, at any point in time, if you feel like you're not hearing me or something is happening, don't hesitate to drop it in the chat box so that I can quickly adjust that and modify that, because sometimes Zoom used to act up. If you're having any issues, just drop it in the chat box so I can rectify it from my end here. All right. So the FX market is a global decentralized market where the world's currency change hands. Okay. So if you're here, if you have ever changed Naira to dollar before, you have actually engaged in the Forex market. If you're here and you have used your Nigerian card to maybe pay for something that is in dollars online, you have actually engaged in the Forex market. Because what do you find out? You find out your bank will send you a debit alert, and they will also help you automatically convert whatever you have bought in dollars into Naira, and they will debit you in Naira. All right. So it is the market where we trade currencies. Solomon, the Forex market is where we trade currencies. All right. So that is what you do in the Forex market. Okay. That's what we do. We trade currencies. All right. And if you now have the skills on how to trade currency in the Forex market, then you become a profitable trader. Okay. So now let's talk about more of the Forex market. Now, the Forex market is the largest financial market in the world. Okay, is the largest financial market in the world. Even the New York Stock Exchange, is just like 0.001% of the Forex market. All right, and with this knowledge, we already know that the Forex market can never go broke. All right. And this is one of the reasons why I like trading the Forex market, because in the Forex market, one man cannot just stand up, or one company or one organization cannot just come one day and say, hey, let's manipulate this market. All right. It's not like crypto, whereby, although, yeah, I'm not condemning crypto, don't get me wrong. All right. I also have some cryptocurrencies, but the Forex market is way stable and more reliable than the crypto market. Because what happens with the crypto market? Elon Musk can just carry his phone and just type in one thing about crypto. And then what do you notice about crypto? You just start seeing crypto start going down, like we saw, happened last year. Okay. So with the Forex market, it cannot happen. All right. We are talking about $6.6 trillion. Eh? Did you just hear what I said now? $6.6 trillion, not Naira. All of you in Nigeria, that Naira has entered your head. I'm not talking about Naira, I'm talking about dollars. $6.6 trillion per day, not per month, not per week, per day, in one single day. 6.6 trillion Naira. Sorry, see me, I said Naira now. $6.6 trillion exchange hands in the Forex market. All right. The whole budget of Nigeria is 5-point-something trillion. I'll be 7-point-something trillion Naira. Now we're not talking about $6.6 trillion. If you go and enter that in your calculator self, I know that your calculator will just show you error something. All right. So this is how big it is. Even the whole wealth of Bill Gates, Elon Musk, all of them, it has not reached $1 trillion. If you add all their wealth together, it has not entered 1 trillion. So if all of them even come and do collab and say, let's shake this Forex market, all right, and say, let's put all our money together and do something, all right, you're going to find out that the Forex market is just remove $1 trillion from the Forex market. It will not shake. It's not looking at you like this. I'm like, so 1 trillion does not shake me. Okay, are we getting this now? So that is how big the Forex market is. So whatever you say in the Forex market is what it is, because you know that one person cannot just come up one day and say, hey, I want to just manipulate this market. And that's the reason why I like the Forex market. Okay, so the next thing is that the Forex market is open 5 days a week. All right. So as I'm speaking to you right now, the Forex market is open. In short, I entered a trade just like, that'll be like less than an hour ago. It's not up to an hour now. So around 3 something p.m. I just entered the trade. All right. So, and tomorrow I'm going to enter another trade. All right. And, on and on like that until Friday. So by Friday, we pack our load. All right. Say thank you, Forex market. We are done for the week. We wait Saturday, Sunday. By Monday, we are in the market again, trading the Forex market, and we keep doing this like that, week in, week out. Okay. So it is open 24 hours a day. All right. 5 days a week. This is another thing that makes it very, very, very special. All right. It is always on. It is always on. Unlike the New York Stock Exchange, whereby it will open at a particular time and it also close at a particular time. All right. So the Forex market is, always on. Okay. So it opens 5 p.m. Eastern Standard Time on Sundays and closes 4 p.m. Eastern Standard Time on Friday. The New York or the is in Nigerian time or in time. You want to go and type 5 p.m. It will show you what that time is around 11 p.m. Sundays Nigerian time, around 10 p.m. Nigerian time. All right. So let's move on. What's traded in the Forex market? It is simple. It is money. This is what we trade. US, we the US dollar, we trade the euro, we trade Japan, and all of these major currencies. That what it's simple. We trade, so we don't. All right, guys, I'm back. These of us in Nigeria, we already understand, the meaning of this. That's the kind of situation we are dealing with network providers here. So, but it's all good. So if you can hear me and see my screen once again, please drop in a 1 in the chat box. Drop in a 1 in the chat box. All right, drop in a 1 in the chat box. All right, thank you so much. Thank you so much. Thank you so much. Thank you so much. So let's move on. So I was already talking about the currencies that are being traded in the Forex market. We have the major currencies, okay? Major currencies. Why are they called major currencies? They're called major currencies because they are the most heavily traded currencies and represent some of the world's largest economies. All right? Steven says network and power supply. Yeah, you already know. So this one is network, actually not power supply. So major currencies, okay, they represent the largest economies in the world, and you can see them already. So it's obvious. The United States, number 1. All right. And what's the currency of the United States? They use the United States dollars. All right. Euro uses Eurozone. That's euro. Japan use yen. Great Britain use pounds. Switzerland use franc. Canada use dollar, which is called the Canadian dollar. And then Australia uses dollar also, which is called the Australian dollar. And then lastly, we have New Zealand, which uses dollar too, and it's called the New Zealand dollars. Okay, so these are the major currencies that are being traded in the financial market. So when you hear me say financial market, I'm talking about the Forex market. Okay, so we have something called currency pairs. Okay, we have something called currency pairs. I hope you guys are taking notes. I hope you guys are following me. All right, and you are enjoying it so far. So if you're following me and you're enjoying it so far, please drop in a 2 in the chat box right now. Let me know those who are engaging with me and following me as I progress in the class. All right, great, awesome. Thank you so much, guys. So Forex trading is the simultaneous buying of one currency and selling another. So when you trade in the Forex market, you buy or sell in currency pairs. For example, the euro and the US dollar, or the British pound and the Japanese yen. All right, so in the Forex market, I can't just say I want to buy, US dollar. So if I want to buy US dollar, the next thing that you have to answer is US dollar with respect to what other currency. All right, so you can't just buy US dollar. You have to buy it with respect to something else. So either I'm buying it with respect to euros, or I'm buying it with respect to pounds, or I'm buying it with respect to yen, or I'm buying it with respect to the Canadian dollar, and so on and so forth. So currencies come in pairs. All right, they come in pairs. So in the Forex market, you'll be seeing things like Euro USD, JPY, you'll be seeing things like GBP, JPY, and maybe CAD USD. You'll be seeing things like Euro, GBP, and so on and so forth. Why? Because in this case, if I want to buy the US dollar, then I'll be simultaneously selling the Euro pair or the Euro currency. And if I'm buying the Euro here, I'll be simultaneously selling the USD. So they come in pairs. You can't just pick one currency and say that is all. All right. So there are 3 categories of currency pairs. We have the majors, we have the minors, and we have the exotic. So let's dive into what they really are. So what are the major currency pairs? What are the major currency pairs? These are those that include the US dollar and the most frequently traded. All right, so there are 7 of them. We have the Euro USD, we have the USD JPY, we have the GBP USD, we have the USD CAD, we have the USD CHF, we have the AUD USD, and we have the New Zealand USD. So you can see that all of these pairs that I've mentioned here, all of them have USD. So whatever pair that comes with the United States dollar is called a major pair. All right, it's called a major pair. Mind you, know the difference between a major pair and a currency. Know the difference between a major currency and a major currency pair. All right, difference between a major currency and a major currency pair. They are different. Major currencies are the currencies that are traded a lot based on the economy. And then major currency pairs are pairs that have USD with it. All right, I hope we understand that. Please, sir, can we have a copy of the slide or recorded file? Love day. This is a free training, no? You want to carry my slide, carry everything with the free training. So calm down, calm down. So if you want to take notes, better start taking notes now. Okay. And later, if I decide to even give you the recording, you're going to be paying for the recording. All right. So this is a free training. So you just want to make sure that you are listening and you are paying attention. Okay. So major currency pairs, they have USD. Minor currency pair, all right, they are the more frequently traded currencies that do not include the US dollar in their pairings. So what's the difference between major and minor? The difference between major and minor is that minor are currencies that are traded, often, but these currencies don't have USD attached to them. Example, Euro CAD, GBP JPY, Euro CHF, Euro JPY, Euro GBP. All right. So these currency pairs don't have the USD, but they are still traded often in the Forex market. All right. Then the next one I have is the exotic currency pairs. All right. These are pairs made up of one major currency paired with the currency of an emerging economy. So that's the word there, emerging economy, such as Brazil, Mexico, Chile, Turkey, or Hungary. All right. So Nigeria, I don't even know where to put Nigeria because I can see that Nigeria is not here. All right. This is emerging, meaning that they are growing. All right. So for Nigeria, we are still in emerge. We have not added gene to it. All right. We are seeing that point whereby we have to emerge. Then we now add the ing to it, emerging. All right. So even in the forex market, the Nigerian naira is still not considered as an exotic pair because, I mean, it's not just traded. It's not volatile. It's not stable. It's just, the economy is not. You can't say, oh, they will release this report at this time, because some of the things that all of this developed economy do is that, they always have economic data. They have unemployment rates. They release this thing on a regular basis. They have income rates. They have, all this per capita income, all of these different reports that they taught us in economics, that we're supposed to be releasing steadily and frequently. We don't do it often. So, I mean, they look at us like we're not serious yet. And that's why we are not listed in the Forex market as something that we can trade with. All right. And the only way to trade US dollar and Naira is to go to our bookie guys and go and meet them and say, Alpha, give me this and give me that. Or maybe through your bank. Okay. So that is the reason why we don't have the Nigerian Naira here. By the way, if you're watching from outside Nigeria, drop in your name and the country you're watching from in the chat box, because I know that we have people all around the world right here. Come on, drop in your name and where you're watching from in the chat box. If you're watching from outside of Nigeria, so I know the international students that we have here. Okay, so that is major, minor, and exotic currency pairs. So let's move on. Now, the next thing we want to talk about is base and quote currency. Now, guys, all of these things I'm saying, it might look as if, when are we going to get to the money-making part? All this one are story. All this story, if you don't understand it now, by the time we get to the money-making strategy, you might be struggling. So that is why you must pay attention to all these things I'm teaching you, even though it looks very simple and straightforward. Okay, so we have base and quote currency. All right, remember that currencies come in, when you want to trade them, they come in pairs, like I just explained to you. All right, so that pair, we have one of those currency that is called the base currency, and we have the other currency that is called the quote currency. So which is the base currency? The base currency is the reference element for the exchange rate of the currency pair. All right, is the reference element. So it's like the major guide that you're looking at when it comes to trading that pair. So for example, if you buy Euro USD, this simply means that you are buying the base currency, which is Euro, and simultaneously selling the quote currency, which is the USD. All right, I hope we get that. Okay, if you get that, type in 1 in the chat box. If you don't get it, type in 2 in the chat box, so I can know where you are. If you get that, type in 1 in the chat box. If you don't get that, type in 2 in the chat box. Okay, so I'm getting 1, 1. Luada I see says 2. Okay, 1, 1, 1, 1, 1, 1, 1, 1, 1. Okay, great. So it means majority of us understand, except Dice and Akindele, and some other few people. Okay, so great. Let me explain again. So Euro here is the base currency. USD here is the quote currency. So if I say, for example, if I told you, oh, I just bought Euro USD, what it simply means is that I just bought euros and sold US dollar. That's what it means. If I told you, hey guys, I just sold Euro USD, what does that mean? It simply means that, oh, I just, sold Euro and I bought US dollar. All right, so those of you typing 2, if you understand better now, put in 1 in the chat box right now. Put in 1 in the chat box right now. Okay, all right, or say, now I understand. Okay, so great. So it's as simple as that. That's all you just need to know. So if I say, oh, I just bought GBP JPY, it simply means that I just bought pounds and sold yen. And if I told you, hey guys, I just sold GBP JPY, it simply means that I've just sold pounds and I've bought yen. All right. Onyezin says, I'm not seeing. I don't understand what you mean by I'm not seeing. Do you mean your physical eyes? Or you're not seeing my screen? Okay, Emmanuel, let me know. Okay, so we know what to do. So, but I think every other person is seeing my screen. All right. So guys, if you can see my screen, for the sake of Emmanuel, please drop in 2 in the chat box. So if Emmanuel, if you start seeing 2 everywhere now, just know that it's from your end. All right. Drop in 2 in the chat box. So Emmanuel, you can see that 2, 2, 2, 2, 2. So check your Zoom. Maybe you slide to the right or left and you are seeing, video of people. So you might want to slide until you get to that part where you're seeing my screen. Okay, great. So thank you guys for dropping 2. I really appreciate it. You guys are engaging. I really love you guys. And that means that I'm going to put in more ginger into this thing. All right. So long and short. Now, this is the Forex terminology. All right. So if you're in the Forex clique or Forex gang, you won't be hearing things like buy or sell. You just be hearing things like, oh, I went long on Euro USD. All right. And what does long mean? Long means what? Buy. All right. And if you hear somebody say, hey, I just went short on Euro USD. All right. It doesn't mean that the person got shot by a gun or something. It means that the person just sold Euro USD. All right. So this is very, very simple. If you hear the word long, it means buy. You hear the word short, it means sell. And some people also use bull and bear. All right. Bull and bear. If you have been watching stock market reports in the news, you should already know what bull and bear is. Bull means, price went up. Bear means price went down. All right. So if I told you that, hey, I went bullish on Euro USD, who can tell me what does that mean? Type it in the chat box, buy or sell. If I told you I went bullish on Euro USD, what does that mean? Is that a buy or sell? All right. Great. Ferdinand said buy. Godbless said buy. Alexander said buy. Great. Chronicle said buy. Lord I said buy. Awesome, 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 awesome. You guys are fantastic. All right. So if I say I went bearish on Euro USD, it means what? I sold it. Okay. So these are slangs that you want to put in your head so that when you're in the midst of Forex traders and they're talking and they're saying long, bear, they're saying, hey, now wow, I thought it's money that I want to come and discuss here. Which one is all this animal kingdom that these people are doing here? All right. So they're not doing animal kingdom. They are actually, using terminologies that we use in the Forex market. All right. So let's talk about bid, ask, and spread. Let's talk about bid, ask, and spread. So now all these things I'm teaching you now, they are things that you must understand. I'm repeating myself again. So that by the time we get to, SS1, we will not be discussing what we had already discussed in GSS2 or GSS1. All right. So right now we're in primary school. Tomorrow we'll go to we'll go to secondary school. Then by Friday, by Wednesday, I mean, we'll go to university. All right. So by the time we get to the university stage, I'm not going to be going back to what I've already taught you in primary school. All right. Or going back to what I've already taught you in secondary school. So make sure that you are following me and you're paying attention. So what is bid? Bid. The bid is the price at which your broker is willing to buy the base currency in exchange for the quote currency. All right. The bid is the price at which your broker is willing to buy the base currency in exchange for the quote currency. All right. So where is the bid price? So by the time we get to opening MT4, all right, you're going to be seeing, when you open MT4, you'll be seeing 2 values like this or 2 prices like this. The first one here is called the bid price, and the second one here is called the ask price, which I'm going to get into in a moment. All right. So this means the bid is the best available price at which the trader, which is you, can sell to the market. If you want to sell something, the broker will buy it from you at the bid price. So if I want to sell Euro USD, I'll be selling it at this price. All right. And if I want to buy Euro USD, all right, I'll be buying it at this price, which is called the ask price. Some of you that are into real estate, you already know what the bid and ask is. You said some people say, oh, that's the ask price or that's the bid price. Okay. So it's something that we also adopt in the Forex market, to talk about prices and all. So what is ask price? Ask is the price at which your broker is willing to sell the base currency in exchange for the quote currency. This means the ask price is the best available price at which you can buy from the market. So what's really going on here? If I say I want to buy Euro USD, what is actually happening is that my Forex broker, so by tomorrow, we are going to be talking about Forex broker and what it's all about. So you understand who a broker is and how they help you in your Forex trading. Okay. So from here, your broker, when you say I want to buy Euro USD, your broker is actually selling to you, all right, while you are buying from your broker. And when you say I want to sell Euro USD, your broker is now buying from you while you are selling to your broker. It's as simple as that. And what would determine the price is with the bid and ask price. So let me make you understand very well. Now, if I go to the Aboki guy now, so let's come back to base. Let's come back home. If I go to the Aboki guy and I say, hey, Aboki, I need dollars. What's the next thing the Aboki will tell me? The Aboki will tell me that, oh, this is the what price that dollar is selling for. Now, the price that the Aboki is telling me, okay, that the Aboki is telling me is the ask price. All right, are you getting me now? So if I went go to Aboki and say, Aboki, I need $1,000, and Aboki says, Oga, dollar now 575 now. That 575 is telling me is the ask price. All right, that is the price is willing to sell for me. All right, that is the price is willing to sell for me. You can see ask price, which your broker is willing to sell for you. So your Aboki is the broker at that point and is willing to sell to you at 575 at the ask price. All right. And if he says 575 and I need $1,000, it means I'm going to give him 575,000 naira. So if I give him 575,000 naira, he will give me $1,000. Now, as I am going home and something now happened, maybe I received a message or I remembered something or something happened, and then I said, more, I need naira. I shouldn't have sold this naira that I have. I need naira back. If you go back to that Aboki guy, all right, and say, hey, Aboki, sorry, I beg, just give me that 575,000 naira back and collect this $1,000. All right. And I need naira now. Now I want you to tell me in the chat box, is the Aboki going to give you the exact 1,000 naira to collect back that $1,000? If the answer is yes, type in 1. If the answer is no, type in 2. All right. So I'm saying here, no, at all. 2. Yes, you guys are correct. It's not going to give you 575,000 naira back. Okay. It's going to tell you that, Oga, if you want, it won't be dealing with you as if you just bought the dollar from him. The way we'll be dealing with you is that it will tell you that, Oga, if you want, naira, if you want to sell dollar to me, if you want naira, it is not 575. If you want it, it is 565. All right. It will tell you that the rate is 565. And then like, but I just gave you 575 now. Just give me back the money. Let me give you back water. It will tell you no, because now what is now presenting to you is called the what? Bid price. That is the amount is willing to, sell to you that dollar, all right, that you are looking for. Do we understand now, guys? I mean, I think this is the best example I can give you. Stand now, just type in 3. Say, yeah, I do. So that's what the bid and ask price is all about. Okay, type in 3, guys. Thank you. So your Aboki is like a broker. All right, your Aboki is like a broker. He always, at every point in time, has bid price and has ask price. All right, so that's why anytime I need dollar and I call Mohammed, my guy, and say, Mohammed, how far? I'll always ask him for both the bid and ask price. I'll tell him how much is he willing to sell and how much is he willing to buy. And he always tells me difference. And most of the time, the difference is always like that 10 naira or 20 naira, often. So that extra from 575 to 565, that 10,000 naira is the Aboki's profit. All right. The difference of that 10,000 naira is the Aboki's profit. All right. And that is actually what is called, and that's actually what is called spread. All right. That's actually what is called what? Spread. The difference between the bid and the ask price is known as spread. This is the amount your broker charges you per trade. Okay, so the way the bookie guy, stays in business is that spread, that difference between the bid and ask price. Okay, if you understand what spread is, based on the bookie example, once again, type in 5 in the chat box, type in 5 in the chat box, type in 5 in the chat box. Okay, type in 5 in the chat box. Those of you watching live on Facebook, on LinkedIn, on YouTube, wherever you're watching it live from, okay, you want to make sure that you join this meeting via the Zoom link. All right, you'll see the Zoom link in the description of the video, or you get it from our past posts on our pages. All right, so because I'm going to be ending this live video very soon, and then for tomorrow and next tomorrow's class, it's not going to go live because I want this to be interactive, so you can see the way I've been engaging with those in the Zoom class. All right, so you can see I'm calling it Zoom class. It's a class. So because if you're on Facebook, if you're on LinkedIn or YouTube, wherever you're watching, something can just pop up and you'll be distracted and you just go and be watching, something else, maybe one cat that is jumping from one place to the other and you'll be distracted. So I want you to come join me in the Zoom class right here. So use the Zoom link to come join us right here on Zoom. Okay, so that is that. So that is the bid and ask price. So I can see a lot of 5 here. Thank you so much, guys, for engaging with me. And mind you, I'm seeing those that are always engaging with me. Some of you have not typed anything since, you have not put in anything in that chat box. I've been saying, drop something in the chat box, drop something. You have not put anything. I'm watching you. I hope you can see my face. You can see the way I'm watching you. I'm watching you. I'm watching you. The next I'll just do is you. Be able to see my face again or again. All right. So engage in the chat box is very, very important. That to make everything stick in your brain fast. Okay. So that is the spread. So you can see that the spread, the difference between this and this is this 1.720. Okay. Ajayi says breaking up. Can you guys still hear me? Can you guys still hear me? Can you guys still hear me? If you can still hear me, please drop in a 1 in the chat box. All right, so Ajayi says back to normal. Okay, thank you. All right, so this price minus this price is what? Is 0.4 pips or 4 pipettes. We're going to talk about pips and pipettes very soon. So this spread is the amount that the broker will charge you for entering a trade. And that's why for those of you here that have entered the trade in the past, you have placed a trade in MT4 before, you always notice that whether anytime you buy or anytime you sell, the first thing you always see in your MT4 is minus something. All right, you won't enter a trade and immediately see that is in profit. You always see minus something. The reason why you always see minus something first is because the broker has already charged you. As you are entering that trade, it has charged you, the spread. And that's why you see minus something. And then after some seconds, you now see that the price start going into the positive. Okay, so that minus something you saw immediately you enter that trade is what is called the spread, which the broker is charging you. So let's view it live on MT4. So I'm a very practical person. If you've attended my class before, you know that all of my trainings, whether it's graphics design, whether it's digital marketing, is always very practical. So let me try and share my phone screen right now. Let me try and share my phone screen right now so I can show you my MT4 and show you some of these things live on MT4 so you see how it looks like real life. It doesn't look as if, I'm just talking all this while. So let me share my screen. Give me 1 minute. Trying to connect my phone to the Zoom meeting. Okay. So share. Just a moment, trying to connect. Okay, great. So if you guys can see my screen right now, type in 3 in the chat box. If you can see my screen, my MT4 opened up, type in 3 in the chat box. Awesome, awesome, awesome. Thank you for engaging with me. You guys deserve a round of applause. You guys are on fire. I'm clapping for you guys now. All right. I like the way you engage with me. It gives me more, energy to put in more into this. Okay, great, great, great. So this is my MT4. So you can see okay, guys. So sorry about that. Sorry about that. Sorry about that. You know how it is. You know how it is. So just bear with all of us and the network people. All right. So let's get straight into it. So I'm coming. If you can hear me and see my screen, please type in 1 in the chat box. 1 in the chat box while I'm trying to set up my phone again. So let me try and connect my phone back right here. All right, so just give me a few moments. Try and connect my phone. Um, share my screen. Okay, great. So if you can see my screen once again, can see my screen. Type 3 in the chat box. Can see my phone actually. Type in 3 in the chat box. Type in 3 in the chat box. Okay, great. All right, so I'm trying to just be practical. That's why I'm taking my time to show you live on MT4. So everything I'm saying doesn't just look like I'm just saying theory. Okay, so you can see right here live. I told you that the Forex market is open. Okay, so this right here, who can tell me this here, is it the bid or ask price? So drop it in the chat box. Drop it in the chat box. Is it the bid or ask price? The one I circled in red and the one I circled in yellow, is it the bid or ask price? Okay, I'm saying bid. Babatunde says ask. All right, red is bid, great, and yellow is ask. Thank you so much. And then let me change the color again. This one I'm circling in blue. What is it called? What is this called? All right, the blue, the one circled in blue, what's it called? Spread. Fantastic, spread. So right now my spread is 11, you can see 13. You can see that price doesn't stay in one place. It's moving constantly. And as Forex traders, this is exactly what we want. We want price to be moving. We don't want price to stay in one place at all. Because if price stays in one place, then there's nothing like Forex trading. All right. It means that it will take you that amount of days or weeks before you can make profits until the price changes. Because if I enter a buy trade now, I'm expecting that price should go up. So if price stays where it is and doesn't go up, it doesn't come down, then I'll just be in that trade forever and ever. So the way price is changing like this is exactly what we want. This is what's called volatility. All right. As Forex traders, we want volatility in the Forex market. That's how we make our money. All right. So I'm so glad that you guys understand this a lot. So let me leave my phone now and share my slide again. And let's move on with the class. Okay. So now let's talk about pips. All right. This is, when you hear pips, we're talking about money. Okay. Because if you tell me that you entered the trade, all right, the next thing I want to ask you is, hey, how many pips did you make in that trade? How many pips did you make in that trade? That's the next thing I'm going to ask you. So what is pips? All right. Pips, it's the unit of measurement to express the change in value between two currencies. That is what pips is. All right. To measure the change in the value between two currencies. That is what pip is. All right. So the other time I was showing you my phone and we're saying as price was changing and changing and changing. Now, as price is changing and changing that way, it's changing in pips. It's changing in what? In pips. A pip is usually the last decimal place of a price quota or of a price quote. All right. So if Euro USD moves from 1.1720 to 1.1721, that is 0.0001 USD rise. All right. And that one rise is called one pip. It's called one pip. All right. And depending on your lot size will determine, how much you make per pip. And we're going to get into that, very, very soon. Okay. We're going to get into that very, very soon. I can see, what's the name here? Oh, I've run away. I'm trying to see the name. Somebody's video is on and I can see the way you're taking notes. I can't see your name here. Okay, that's Moshood. Moshood, wave. I can see you. I can see the way Moshood is taking notes, right? The kind of students I like, okay? So if you're not taking this training serious, it's better you just go and be chill and go and be, watching Netflix now or something. All right, because trust me, guys, at the end of this training, you're already going to be, trading the Forex market. All right, you're going to be making some cool money. Okay, so PIP is always the last digit. That's what you should know. It is the last digit. All right, the last digit. So here, the PIP is measured here with this one. So if this one changes to 7, how many pips is that? Type it in the chat box. If this one changes to 7, how many pips is that? How many pips is that? If it changes to 7, how many pips is that? In difference. How many pips is that? Type it in the chat box. If that one changed to 7, what's the difference? All right. God bless 6. Moshood 6. Awesome. That John says 7. It's not 7. No. I said if it changes to 7, what's the pips difference? So that should be 1 minus 7 minus 1, which will give you what? 6. Awesome. I'm seeing 6. It means you guys are getting it. So it means that price has moved, 6 pips upward. All right. And if this went to from 21, if it goes to 25, I say for 25. From 1, if it goes to 15, yes, if this goes from 21 to 15, that will be a difference of what? 6 also. All right. But this time, the 6 is not in the upward direction, but in the what? In the downward direction, meaning that price has fallen 6 pips under. All right. So Ajayi says -6 loss. So in Forex, whether price is going up or going down, we make money. All right. So it doesn't mean that if price goes down, that you have made loss. All right, Ajayi, I hope you get that. I also have that feeling when I was entering the Forex market as a beginner that, we always want price to just go up. We don't pray for that. Though. We pray that price moves either up or down. It's not our business. But as long as it's moving up and down, we are making money. That is the way the Forex market is. So if I say price goes down, it doesn't mean that I'm necessarily talking about loss. All right. I'm just talking about the movement, the change in price. All right. As Forex traders, what we want is we want changes in prices. We want to keep seeing that change. We don't care whether it's going up or down. If you like, the US economy should crash and the thing is going down. As it's going down like that, some people are making millions of dollars. And the day is doing well too, and it's going up. As it's going up like that, people are making millions of dollars. Okay. So it depends on which side you fall on. All right. So some people, they've entered some trade and the trade blew their account and say, hey, oh, Jonah, hey, money has gone. It's the same way people are talking to Jonah. It's the same way somebody who has entered the opposite direction of that trade is cashing out and, you know, making money in dollars. All right. So whether price is going up or down, we make money. All right. So Ajayi says noted. Good, 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 good. Now, some currency pairs like this JPY, all right, go. So most currency pairs go out to 4 decimal places, but there are some exceptions like the Japanese, you know, yen pair. All right, the Japanese yen. You can see that this one is 4 after the point here. But after the point here, you can see we only have what 2 values here. All right, and that happens with the Japanese yen. So with the Japanese yen, your pips is still this last value here. That's what you consider. So if this goes from 85 to 95, that is 10 pips. Okay. And if it goes from 85 to 75, that is also what 10 pips, but this time in the opposite direction. I hope we are getting this and we are following. Okay. So let's go to pipet. So I said I was going to talk about pips and pipet very soon. Let's go to pipet. All right. So what is pipet? Pipet is, let me come back home. Let me come back home again. Come back to Nigeria. In Nigeria, we have Naira and what? Kobo, Abi. In the US, we have dollars and cents. All right. So this pipet is like a, you know, broken down unit or a fractional unit. You can see here that, okay, let me read the definition here. They are brokers, Forex brokers that quote currency pairs beyond the standard 4 and 2 decimal places. All right. They quote to 5 decimal places and 3 decimal places. So what do I mean by that? Can you see that this one here is not just 4? We have 1, 2, 3, 4, and then this 6 that is up here makes it 5. And then when it comes to the Japanese yen too, in the previous example, it was just 2. But right now you can see we are seeing 3 here, 852. So this 2 here is the pipettes. All right, they are quoting fractional pips, also called points and pipettes. So these brokers are letting you see the very breakdown of the price. All right, seeing the breakdown, and it's good because it means they are not cheating us. What does it mean? For example, now, if somebody says I only sell in Naira and the person is not selling in Kobo, it means that if that person wants to sell something to you that is 1 Naira 50 Kobo, because the person is not selling in Kobo, the person will have to forcefully sell that thing for you as 2 Naira. Are you getting me now? Okay. If you are getting me, type in 1 in the chat box. Okay, type in 1 in the chat box. So it means that if somebody says, okay, good, I understand. One example that will make you understand. All of you that are old here, because some people now, if I'm saying this now, they will not even know what it means. You know, all these new generation people that they just, you know, that just came. When MTN and Airtel and all of them came that time, and you know, they were charging us per minute, they were not charging us per second. What happened then? If you made a call that was 1 minute 45 seconds, what would they charge you for? They would charge you for 2 minutes. Okay, instead of them charging you for the exact, you know, 1 minute 45 seconds that you used. All right, until Glo came and Glo started doing per second billing. And when Glo started doing per second billing, that is when, you know, that cheating now stopped. Okay, they were now charging us per second, meaning that if I do 30 seconds, instead of you charging me 1 minute, you charge me exact 30 seconds. So brokers that add this 5th value here or this 3rd value here are actually trying us to do us good. They're not trying to cheat us. All right, they're trying to give us the exact, you know, amount of that currency that we want to buy or sell. Okay. So even 159 seconds, now that one the pain pass, especially yes. So all those periods then, everybody will always, when they now go to business, when we go to business center then to make call, we'll always be calling and be watching time. You put clock in front of you so that once it's almost, you know, that time, you now end the call and say, hey, bye, 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 I'm not talking again, I'll end it. So that because you just want to pay that exact amount. So, but thank God there's, you know, per second billing now. Everybody, you know, is not looking at all of that again. So the same thing with pips and pipettes. All right, pipette is what your broker should actually be charging you pipettes so that you can see what is actually going on very well. Okay, so you can see that if price goes to, so let me ask a very intelligent question now and see those that will answer me. If price goes to 20, if price goes to 29, all right, so I mean this 20 now, this 20 now turns to 20 and this 6, if this 20 remains and this 6 turns to 9, what's the value in the change of price? Who can tell me? If this remains 1720 and this 6 turns to 9, what will be the difference in the value of that price? Type it in the chat box. I'm waiting for you guys. Type it in the chat box. 6 to 9. It went from 6 to 9. Fantastic. 3 pipettes. 3 pipettes. God bless says nothing. It's 3 pipettes. Oh, all right. But if you say nothing, maybe I can understand where that your nothing is coming from. And Emmanuel to say 0. Maybe I can understand where your 0 is coming from. Maybe you guys have been trading before. All right. So, but price has actually changed. It has changed with just 3 pipettes. All right. 3 pipettes. All right. So, but for those people saying nothing, I think I understand them, because in real life, if you have 10 naira, 50 kobo, and then price goes from 10 to 56 kobo, and you're like, that 6 kobo is insignificant. All right. It's like, what's 6 kobo? That's not changing price. Are you getting me now? So you'd be expecting price to move from like 10 naira to 11 naira. That's when you now say, oh, there's actually a significant change in price. All right. So, but based on the question I asked, what I just expected you guys to tell me is 3 pipettes. All right. So good. For those of you that said 3 pipettes, amazing. So let me go to the next. So I hope we understand what pips and pipette is, because it is what we're going to use to calculate our profit and loss when we get to profit and loss. All right. So the next thing is, what is a lot? All right. Thank you, Ajayi. Okay. What is a lot? A lot is a unit measuring a transaction amount. All right. So it is the combination of pips and lots that actually determines how much you make in the Forex market. And that's why I'm explaining what pips is now. And now I'm moving to lots. Okay, so from this lot now, what I'll be moving to will now be calculation of profit and loss, because we'll multiply our lot times our pips. That's what's going to give us the amount we actually make in the profit in the Forex market. Okay, so when you go to the grocery store and want to buy an egg, you can't just buy a single egg. They come in dozens or lots of 12. Now, when I mean grocery store, I don't mean the mala in front of your house or the woman that is selling biscuit and sweets in front of your house. Okay, because some of you are like, what do you mean I can't buy one egg? I can buy one egg now. So I'm actually talking about, like, if you go to a very big store, all right, you will see that they've packed the egg in a crate, all right? And if you want to buy that egg, you have to buy it in that crate like that. So I'm using this to explain to you what lot size is. In the Forex market, when you want to enter the Forex market, you have to enter the Forex market and tell MT4 that, hey, this trade I want to enter into, I want to enter in lots of, 100,000, or I want to enter in lots of 10,000, or I want to enter in lots of 1,000, or I want to enter in lots of 100. Okay, it is the amount of lots you enter into that will determine how much you make. Okay, so for example, now, if somebody, says, I just made a profit, the next thing I'll ask the person is, how much pips did you make? The person will tell me the pips. Then the next question I want to ask the person is, okay, you made 100 pips. So what was your lot size? All right. So it is when the person tells me what is our lot size is, that I'll be able to now use that to judge how much he makes. Because if somebody says he made 100 pips. That person could have actually made 100,000, or could have made 10,000, or could have made 1,000, or could have made $100, or could have made $10. So the same 100 pips can give different people different, profits. All right. And don't worry, you're going to understand it very, very well. Okay. So in the Forex market, you can't just go and buy €1 and say, I want to buy €1. Dio, can you hear me now? I can see your chat. Oh, okay. It says, please, can we get the recording of this class, please? This is good value I'm getting. Yes, I know you are getting value because that's my intention for this, 3 days. All right. But if you want the recording, you have to pay for the recording. All right. So I think I should just give you guys the recording for just 5K. All right. That's for those of you, in this Zoom. So if you want the recording, it's just going to be 5,000 naira. You can pay for it. You get the recording every day when we end the class. All right. So maybe you can use that to refresh your memory and walk around it. But those who are not in this class, those who are not attending this class will be getting the recording for 20,000 naira, because that's how much I, value the recording. Okay. So if you're here, you need the recording. It's going to cost you 5,000 naira. And that's if you pay between now and Wednesday. All right. So because anybody that chats after Wednesday, I regard you as an outsider, meaning that because I can't tell whether you attended this class or not. So you'll be paying 20,000 naira. Okay. So that's that for the recording. Let's get out of the way. Okay. So I can't go to the Forex market and say I want to buy €1 and the Forex market will sell €1 for me. The Forex market is very big, $6.6 trillion. So it doesn't need your €1 or it doesn't need your $10. What it needs is the minimum of like $100,000. All right, and that is what is called lot. But I will explain to you why we can still now trade the Forex market with $100, with $50, with $500, with $1,000, and the Forex market will still accept us. That is what is called leverage. I'm going to get there in a bit. Okay, so but what I want you to understand from this lot is that there's something called lot, meaning that anytime you are entering a trade, you are entering a trade in a package and not in single transaction. You are entering in a package. That's what lot is. That's why I use the example of a dozen of egg. All right. So if I tell you that 100 pips and inside my crate of egg has 12 eggs inside, it means that 100 pips is 12 times 100. That is 1,200. If your own crate of egg contains 100 eggs in one crate, it means that if you do 100 pips, you have just made $10,000. I hope you are getting it now. All right. If you're getting it, put in 5 in the chat box. If you're getting it, put in 5 in the chat box. Okay. Put in 5 in the chat box if you're getting it. All right. Awesome. I can see your 5 coming in. Great. Fantastic. Awesome. All right. Great. So let's move on to the next thing on my slide. All right. And that is, okay. So in the lot, so before I get to leverage, you can see, so lots in Forex, we have different types of lot. We have standard, we have mini, we have micro, we have nano. So this standard could be like 100,000 eggs. Are you getting it now? This mini is like 10,000 eggs in the crate. This micro is like 1,000 eggs in the crate. And then this nano is like 100 eggs in the crate. All right. I'm just trying to make you understand. That's why I'm using egg. So don't go and be trading Forex and be saying, I want to buy egg. I'm just using that example. Okay. But I know as I'm using it as an example like that, you're getting it. All right. So this standard has 100,000 volume in it. Mini has 10,000 volume in it. Micro has 1,000 volume in it. Nano has 1,000 volume in it. All right. But the actual lot size of this 100,000 is one lot size. All right. And the actual lot size of this mini is 0.1. And the actual lot of this micro is 0.01. And the actual lot of this is 0.001. All right. Now, This one lot size simply means that for every pip, I'll be making $10. All right. So if you enter a trade and you use one lot size, it means that for every pip, you'll be making $10. All right. So if somebody says, hey, I just made a trade of 100 pips in profit, and the person tells me that he used one lot size, that one lot size simply means that the person has made $1,000 in that 100 pips move. All right. But if the person used 0.1, it means the person has just made $100, because if you multiply this $1 times 100 pips, that will give you $100. And then this one will be 0.1 times 100 pips, that will give me $10. All right. And then this one will be 0.001 times 100 pips, and that should give me, $0.01. That's 1 cent. So there's a typo here. Okay. There's a typo here. It's supposed to be 0.01 and not 0.001. All right. So this is how you begin to calculate how much you have made, in the Forex market or not. Okay. I hope we get that. If you get that, type in 3 in the chat box. If you get that, type in 3 in the chat box. So right now, I want to talk about leverage. Let's talk about leverage. Let's talk about leverage. All right, I can see the 3s coming in. Good. Good. Sorry guys. Just trying to get some people into the meeting. Okay. Awesome. Does lot reflect on the chart? Yes. Don't worry. Is it today? Okay, tomorrow. Tomorrow we're going to be talking about how to place a trade. So where you are going to put in this 1 on your MT4, I'm going to show you. Where you are going to put in, your price, all of those things, stop loss, all of those things. We're going to talk about them in tomorrow when we talk about how to place a trade. All right. So Said, no worries about that. So that's why it's a 3 days class, because I don't want to rush you and I want to make sure that you get everything perfectly. All right. So what is leverage? What is leverage? All right. So you're probably wondering how a small investor like yourself can trade such large amounts of money. So you can sell those money we're seeing in the micro, in the macro, 100,000, 10,000. You're wondering, oh, what's going on? So this is what's going on. Think of your broker as a bank who basically loans you $100,000 to buy currencies. All right. All the bank asks from you is that you deposit $1,000, which it will hold for you, but not necessarily keep. All right. So for example, if the allowed leverage is 100 to 1 or 1% of position required, and you wanted to trade a position worth $100,000, but you only have $5,000 in your account, no problem, as your broker would set aside $1,000 as deposit and let you borrow the rest. All right. I know that's like a lot to put in your head. He said, please, I came late. What's the meaning of MP4? It's not MP4, MT4, MetaTrader 4. We're going to talk about that in, extent tomorrow in the class. All right. So don't bother yourself about now. Just concentrate on what I'm teaching you now. Okay. So what does this mean? All this English I've read to you now, what does it mean? It means that if you want to use one lot size, like I showed you in the previous slide, if you want to use one lot size and all you have in your account is like $100, it means that you won't be able to use one lot size. Because I know that some of you're already happy. When I was talking about one lot size, I already say, if there's one lot and there's 0.1, there's 0.01, why would I go and use 0.01? Why not just use 1 for all of my trades? So anytime I make like 100 pips, I'll just make $1,000. If you were like that, if you're thinking that in your mind, drop in 3 in the chat box now with, that you're laughing emoji. All right, confess your sin now. Some of you are like, one lot size, $1,000. Hey, in short, if there's 10 lot size, I will use 10 lot size. If we're thinking of that in your mind, drop in, 3 in the chat box right now. Let me see those people that were thinking like that. Now I will use 20 lot size. I will use all the lot size I can. All right. So great. Now, those of you that were thinking that, if you were thinking that, what will spoil that your thinking is your capital. All right. Is the capital that you have to trade. Okay. So if you don't have enough capital, you won't be able to use all of those big lot sizes. All right. You won't be able to use all of those big lot sizes. You'll only be able to use the one that matches the amount you have in your account. All right. So that's why you have this here. So if I have $1,000 and my broker is giving me a leverage of 100 to 1, then it means that I can use one lot size. All right, for my trade, and it will go. All right. But what it simply means is that no matter what happens in your account, you must have nothing less than $1,000. Once you have anything less than $1,000, then you won't be able to continue with that trade. Okay. If you are getting this, type in 5 in the chat box. If it's making sense to you, the way I'm breaking it down, type in 5 in the chat box. All right. So it is the amount you have as balance in your trading account that will determine the lot size that you can use. Okay. And by the time we get to, trade management and all of those things, I'm also going to show you the right lot size you should be using for your account so that you don't go and blow your account. Because some of you, like I said, in your mind, you're already thinking of me, I will use 1,000 lots. So that if price does move 100 pips last song, I've made $1 million. It doesn't work like that though. If not, everybody would have been rich in this life. Okay. So that is what leverage is all about. So I've spoken about pips, pipette. I've spoken about lot sizes. Now I've spoken about leverage. All right. Now that we understand all of that, now let's talk about how to calculate profit and loss in the Forex market. So this is scenario 1. All right. I bought one lot. All right. You already know what one lot means. So I bought one lot of Euro USD at 1.1720 and sold it at 1.1750. All right. So what does that mean? It means that I bought it at this price. And after buying it at this price, what happened to price? Did it go up or come down? All right, type it in the chat box. Did price go up or come down after buying at this price? Did it go up or come down? Up. Yes, personal said up. Personal, is that your name? Nice. All right, everybody saying up, 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 up. It goes up by 30 pips. Awesome, fantastic. It went up. So because it went up, was that in my favor or not in my favor? It was in my favor, put in 1. If it was not in my favor, put in 2. All right. If it's in my favor, put in 1. If it's not in my favor, put in 2. All right. So it's in my favor. It's in my what? Favor. Okay. It's in my favor. All right. It's in my favor. Great, 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 great. Ekunda says 2. So Ekunda, you're actually wrong. It's in my favor because I bought. So if I buy something, it means that I am expecting. Remember that long. Buy long is equals to buy. So if I buy something, I'm expecting price to go up. And then price actually now went up. So for me to calculate my gain, the first thing is I have to know the difference in pips between the price at which I bought and the price at which I'm selling. And to calculate that, it's just simply doing mathematics of this value minus this value, and that will give me 30 pips. All right. And then one lot, based on that diagram I gave you, one lot is what? $10 per pip. Abi? You can see $10 here. So let me go back again. So $10 per lot, per pip, and I made 30 pips. So my profit will be what? 30 pips times $10 is equals to what? $300. If you understand, this clearly, please type in 2 in the chat box. Type in 2 in the chat box. 2 in the chat box. I'm wrapping now. typing two in the chat box. Yo, two in the chat box. Fantastic, fantastic. You guys are good students, and you are getting this perfectly. Okay. So the next time somebody tells you that, hey, or more, I just made 500 pips. Just tell the person, calm down, calm down. I know you made 500 pips. What was your lot size? All right. It is when the person tells you the lot size, that's when you now know whether you say, yeah, or you say, you tried. Because somebody made 500 pips and the person told you that he used 10 lots. 10 lots. So it means that that person has just made, that's how much, say, 500. The person has just made $5,000. Am I correct? 500 times 10 lots. 500 times 100 is what? It's 50,000. Means that this has just made $50,000. Yes. The person has just made 50,000. That's when you say, whoa, now money without to. But the person told you that, I made 500 pips and the person was using 0.01 lots. That person has just made like $50. So the other person, calm down. Bro. Don't worry. That's good. But it doesn't mean that, it's a bad trade. For 500 pips at 0.01 and the person made $50 or $500, I don't know what it is now. So I carry my calculator, all right? Then it means that was still a very good trade, all right? Because the day the person will now enter that same trade and make another 500 pips with one lot size, the person has blown, all right? So apparently there is profit and loss depending on your transaction, or better still, we use in favor or not in favor. Yes, so Ajayi, in the Forex market, there's profit and loss. There is profit and loss. So I'm not like other people that will be teaching you Forex and all those pumping in your head is that, it's profit, 24 hours, profit. It's a lie. There's also loss, all right? And that's why you must have a strategy, okay? That is why you must have a strategy. And the strategy I'm going to teach you is a strategy that is 3-to-1, ratio in terms of your profit and loss, meaning that if you make profit, you are making profit big. And when you make a loss, you are making making a loss in a small way, all right? So imagine if if you enter a trade, you win $100, and then you enter a trade and you lose $30. You still have a balance of what? $60. So that's the strategy I'm going to teach you. That's the way it works. Anytime you win a trade, you win $100. No, sorry, not $100, 100 pips. Some of you are already saying, $100, because it will determine your balance. That will determine how much you actually make. All right. So 100 pips profit, and anytime you lose just 30 pips. All right. And imagine that you have 7 trades that you won and 3 trades that you lost out of 10. All right. It means that your 7 trades is 700 pips. That 3 trades you lost is just 90 pips. If you subtract 90 from 700, it means you still have made a profit of 610 pips. All right. That is amazing. Okay. That is what makes something a strategy. All right. So most people's strategy, they'll be teaching a strategy that, every day you're making loss, or maybe anytime you make a loss, you're making a loss of 100 pips. And anytime you make a profit, you're making a profit of just, 50 pips. All right. Those kind of strategy doesn't work. All right. Those kind of strategy doesn't work. All right. So, my strategy that I'm going to be teaching you can make you over 30,000 pieces. I say 30,000. Can make you over 30% in a month. All right. And I'm just trying to be moderate. I don't want to exaggerate. All right. Because you can actually make in some months 50%. You can make in some months, 60%. That's the way this strategy works. All right. So let's go on. Let me not talk too much. All right. So let's look at this scenario too. I bought one lot of Euro USD at 1720 and sold it at 1700. All right. The difference is 1720 minus 1700, which is 20 pips. And then one lot is $10 per pip. So meaning that I made a loss of 20 pips. Who can tell me, why did I put loss here and not profit? Why did I put loss here? I bought this at this price and sold it at this price. So the difference is 20 pips. Why is it a loss and not a profit? All right. Tell me the answer in the chat box right now. Tell me the answer in the chat box right now. Tell me the answer in the chat box right now. Why is it a loss and not profit? Why is it a loss and not profit? All right, I'm waiting for you guys. Price went down. Fantastic. Because the sales price is lower than the cost price. Okay. IB Cole, IB Cole Media is like you are a commercial student or something. See the price, cost price, selling price, you know. So, but you are still correct. You sold it at a price lower than you bought it. Fantastic, Ekundayo. Price was bearish. You guys are awesome. You got it right. Okay. So when price, I bought something at 1720. I'm expecting that price should go up, but price didn't go up. It came down. So what it means that I've actually made a loss of what? 20 pips. And to know the amount it is in dollars, I have to multiply that 20 times my lot size, and that will give me the amount I actually lost in dollars. All right, great. So that is it. Scenario 3 here again. So let me just rush through this. So this one was sold. I sold one lot size of Euro USD at 1750 and bought it at 1710. All right. The difference between this pip is what? 40 pips. And my lot size is $10 per pip, and my profit is $400. Now, why is this a profit? If you look at this price that I sold it at, is higher than this one. So price went down. So but price went down. And why am I still now calculating it as profit? So who can tell me that in the chat box? Why am I still calculating that as profit? All right. Why am I still calculating that as profit? Okay. Tell me in the chat box why is it still a profit? Okay, I'm waiting for your answer in the chat box. Why is this still profit, even though price went down? Why is this still profit? It went your direction. Good, good. God bless says it went your direction. Who else again? Come on, guys. Come on, guys. Because you sold and buy. Yes, I sold and I bought. Awesome. So I went bearish on it. Okay, meaning that I'm expecting price to go down. So I sold it. So if I'm selling something, I'm expecting that price should continue to go down. For example, now maybe I had the news. And based on this news I had, though, it looks as if US dollar is going to fall. What do? I go and sell US dollar. And when I sell US dollar and tomorrow morning I woke up and saw that US dollar is falling from 500 to 400, that's a profit for me because I'm not holding dollars again. What I have with me is Naira. So if I take that Naira I have with me and go and buy dollars at that point that dollars has fallen, I'll be making a profit of 100 pips from that transaction. All right, great. So I could say you sell it when price is high and bought it when price is low. Awesome, 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 awesome. You guys are good students. Clap for yourself. Put in the clapping emoji in the chat box. So clap for yourself. Clap for yourself. Clap for yourself, everybody. Everybody clap for yourself. Put in the clapping emoji in the chat box, to clap for yourself. All right. So you can see the same thing happened here. I sold at this price and bought at this price. So I sold at 1750 and bought at 1785, which is a higher price. So this is a loss. All right. So the difference is 35 pips. You multiply times $10, that will give me minus 350 dollars because I sold. I was expecting price to go down, but rather price went up. Okay. So you people are not clapping for yourself. Clap for yourself. Only 2 people have clapped for themselves in the chat box. If I don't see your emoji now, I'll just gonna look for your name. I'm just gonna be removing people sharp, 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 sharp. I'm turning this to a private class. All right. So clap for yourself now. You can see my face. Have you guys are seeing my face? You can see the way my face is. You can see my face, have you? You don't clap for yourself now. Whoa. It's removed straight. Good, 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 good. Okay, 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 okay. Good, 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 good. Awesome, awesome, awesome. So let's move on. Let's move on. Let's move on. You are blowing sacks. Who is this person blowing sacks? Chronicles. You and this is your chat box. You just you're blowing sacks. Then you should blow sacks. So let's view it live on TradingView. Let's view it live on TradingView. All right. So let me go open my browser to TradingView. We're also going to be talking about TradingView in our future classes. I think on Wednesday. So, but for now, let me just quickly open TradingView and show you, a couple of things here. All right, so it's loading up. Once it's done loading up, I'll share my screen with you and you'll be able to see TradingView. If you've heard about TradingView, type in one in the chat box. If you know what TradingView is, type in one in the chat box. If you've heard about it before, type in one in the chat box. If you've heard about TradingView, type in one in the chat box. All right, great. IB Cole says yes. Ekunda says yes. Awesome. Matthias says yes. Great, 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 great. So let me share my browser with you so you can see my trade. So if you can see my trading view, if you can see this chart, type in 2 in the chat box. 2 in the chat box. So before I continue, you can see my screen. Type in 2 in the chat box. Type in 2 in the chat box. Great, 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 great. So a lot of us can see my chart. Awesome. Okay, great, great, great. So Phil is saying, do you sell in anticipation or when price go down? That's not how you trade the Forex market. You don't trade the Forex market and be saying, you have to go in with a strategy. So by the time I'm teaching you that strategy, you know the exact time to sell and you know the exact time to buy. All right, Phil, I hope you understand that. Okay, so you don't just look at this candle now because this candle is going up. Like can see on my chart now, I can say, this candle is going up. You're not gonna open your MT4 and not go and buy. All right. That's what most people that are trading for the first time do. And that's how they end up losing all their money. So you don't want to do that. All right. You have to always come into the Forex market with a strategy. I'm going to be teaching you that. So let me just quickly explain, what I mean by those pips and everything. So let's assume that when price was here, can you see this green candle here where my mouse is? Okay, so let's assume when price was here, somehow our strategy informed us that price was going to go down at this point. All right, and I sold at this point. What would have happened? I would have made a profit of 140. Sorry, not even one. I'd have made a profit of 159 pips. Or let me just round that up. 160 pips. All right. Can you see this one? Can you see this 160 that is showing in this red bar here? If you can see it, let me know. Type in 3 in the chat box. If you can see that 160, if you can see that 160.4, type in 3 in the chat box. Yeah, so with this trading view, you can use it to measure your pips. All right, you can use it to measure your pips. So if at this green candle that is here, you can see this green candle I'm pointing at. If my strategy told me that, it is time to sell, and I sold at that point, price would have, started going down, 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 and I would have made 160 pips from this transaction. All right, before price started going up. And another scenario is that if while I was here, can you see this red candle I'm pointing at that is at the bottom here? If my strategy has informed me that, hey, price is about to go up, so you want to buy, and I bought at this point, right now I'll be in a profit of 114 pips. All right. And now it is now 118. Can you see price is going up? And now it is now 124. All right. So I would have been in this profit like this. I would have been a profit of 130 pips as at now. I can see the price is still even going up. Okay, so this is how you measure your pips and calculate your profit and loss using TradingView. All right, so I'm going to talk about TradingView on Wednesday, so you understand how to use all of these things. The way I was able to measure this like this, you also be able to measure it like that. All right, and know how to use it. So that is that. So let me go back to my slide and let's continue and begin to wrap up for today. So once again, how to calculate profit and loss. 1 pip is equals to what? $10 if your lot size is 1. All right. 1 pip is equals to $1 if your lot size is 0.1. 1 pip is equals to 10 cents if your lot size is 0.01. Okay, and then 1 pip is equals to 1 cent if your lot size is 0.001. Do we understand? All right. If you understand, type in 5 in the chat box. Type in 5 in the chat box. And you can see other examples I've given here. You can take a screenshot of this. So you can always use this as a reference point when you want to, understand or remember what lot sizes are. So somebody who made 100 pips is totally different for these 4 different persons here. If somebody was using 1 lot, that person has just made $1,000. If somebody was using 0.1, that person has just made $100. If somebody was using 0.01, that person just made $10. And if somebody was using 0.01, in that 100 pips, the person just made $1. All right? It's as simple as that. It's as simple as that. So next slide. So now this is my based on experience. This is my recommended lot size based on the balance you have in your account, so that you don't go and blow up your account, or you don't get greedy and say, oh, because I can use 1 lot, let me just enter 1 lot so that I'll make plenty profits. As you're thinking of your profit, you also want to be thinking of the loss. What if price goes against me? All right, so that same 100 pips, if price went against you 100 pips, that would have been minus $1,000 in your account. All right, so you want to make sure that you are not greedy. That is what has blown so many people's accounts. All right, that's what has blown so many people's account. If you are here, you have blown your account before. Me, as you're seeing me like this, I've blown my account before. About 2 years ago, I blew my account. Wow, the account blew. If you have blown your account here, all right, type in 3 in the chat box. If you have blown your account here before, type in 3 in the chat box. Okay, type in 3 in the chat box. If you are here, you've traded before and you blew your account, type in 3 in the chat box. All right, so what do you mean by blew your account? It means that maybe you started with $100 and you entered 1 trade and all your $100 disappeared like that. All right, so Godwin says yes. Awesome. All right, now blowing your account is a bad thing, but it's also a good thing, because it's when you blow your account that your eyes will now clear and you will now sit down and say, okay, oh yeah, let me take this thing serious. Okay, because that time that somebody was telling you, don't use 1 lot size, don't use this one for this $500 account that you have, you were saying it's a lie. I just made $100 now. Okay, and because you made $100, now say, I want to enter another one and make another $200. You now increase your lot size, and then that one you now enter now went against you in the lot in loss, and then you now blew your account and you're now crying that, hey, my account has blown. So has happened to my account. What I used to tell people is that the reason why people lose money in Forex is because of 3 things. Number 1, they don't have training. All right, they've not gone for a training. Number 2, they don't have a mentor. Number 3, they are greedy. All right, if you agree with me, type in 5 in the chat box. All right, they don't have a mentor, they've not gone for any training that is substantial, and they don't have, and they are greedy. All right, these are the 3 major reasons why people lose in the Forex market. And if you have a good training, you have a mentor, and you're not greedy, trust me, guys, you will make a lot of money in Forex. All right, I'm a testimony of it. All right, you will make a lot in Forex. All right, you will make a lot in Forex. So guys, just make sure that you follow every single thing I'm telling you right here. So if you're starting with $100, the lot size I would recommend for you to use is 0.01, meaning that per pip you'll be making 10 cents. So if price goes in your direction 100 pips, you would have just made $10. I know it's small. Don't go and say, because it's small, let me not use 0.1, let me use 1. All right, that 1 can clear that your $100 account. Okay, if your account is $200, you want to use something like 0.02. If your account is $500, 0.05. Okay, if your account is $1,000, you can use 0.1. All right, and if your account is $10,000, then you can use 1 lot size. Okay. I hope that in that box, type in 3 in the chat, move to the next thing. 3 in the chat box, move to the next thing. Type in 3 in the chat box. Understand what I this image waiting for you. Come on, type in 3 in the chat box if you understand. Good, 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 good. All right, so you can also take a screenshot of this, for you to understand better. All right, for you to understand better, you can also take a screenshot of that. Okay, great, 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 great. You guys are awesome. So let's move to the next thing. So let's talk about Forex orders. All right, so we're almost rounding up. Let's talk about Forex orders. So what are the different types of Forex order? We have market order, we have pending orders. All right, so in the Forex market, you have the chance of buying instantly or selling instantly, or you can also set a pending order. A pending order means that you are giving your MT4 an instruction that when price gets to this certain amount, then that is when you should activate my trade. All right. So that's the difference between market order and pending order. You can see from my notes here, an order instantly executed at a price that your broker has provided. So meaning that if you open your MT4 and you just hit the sell button or you hit the buy button, you are entering it at the market order, the market execution. All right. Then pending order says an order to be executed at a later time at the price you specify. So for your pending order, you set a price and say, if price does not get here, don't activate my trade. But if price gets here, then activate my trade. That is what a pending order is. An example of that is buy stop, sell stop, buy limit, and what? Sell limit. So this market order doesn't need any explanation. Buy now is buy now. Sell now is sell now, meaning that do it now, as I'm talking. All right. But pending order simply means that price would wait for a condition to be met before it is being activated. All right. So let me focus more on the pending orders. So the first one I'll focus on is the stop order, which simply means a stop order stops an order from executing until price reaches a stop price. So an under stop order, we have buy stop and we have sell stop. What is buy stop? You place a buy stop order to buy at a price above the market price. All right. And you place a sell stop to sell at a price below the market price. That is what it is. So let me explain more with this diagram here. So can you see, let's assume that price is currently here. All right. Price is currently here. What does buy stop mean? Buy stop means that I'm placing an order that says that, hey, maybe based on my strategy and everything, I know that if price should come to this point, then I know that price will continue to go up. So what will I do? I want to set a buy stop. Why am I setting a buy stop? I want to set a buy stop so that I can go and do other things with my life. All right. So because if there's nothing like buy stop and I'm expecting price to come to this point, it means I have to sit down with my laptop or with my phone and be checking price, for 30 minutes, 1 hour, 2 hours, and be waiting for price to come to that point so that I can enter the trade at that point. Okay. So, I mean, you notice that everybody will be walking about with their phone like this. Every Forex trader will be walking with their phone like this every day. Before you know it, motor will jam some people, some people will enter gutter, so many things will happen to some people just because everybody's waiting and looking at, when price gets there, I want to enter the trade. But with pending orders like your buy stop or your sell stop, you can automatically put it there and say, when price gets here, automatically enter into the trade for me. All right. And if price does not get there, don't enter into the trade for me. Simple. So once you set that, you can now go and be doing your normal office work, your normal whatever it is that you're doing, and be rest assured that when price get there, it automatically be executed on your behalf. So this is the place we were before when we said the buy stop. Then at this stage, you can see that price has what gotten there and even gone above it. So what happens at this point? Order has been what? Executed. Okay. And then at this point here, you can see that price did not get here. So what happens? Our order is not what? Executed. Okay. So those are the things that you have. The same thing with sell stop. I place a sell stop right here, hoping that price will come and touch it. And then price actually eventually came and touched it and passed it. So what happens? It means that the trade will be executed instantly. And then you can see this scenario here, that price didn't come down here to come and touch this line. So what does that mean? It means that my trade will not be what? Executed. Now let's talk about limits. The same thing with limits. Let me just go straight to the diagram. For buy limits, it's kind of like opposite. Buy limit simply means that you are expecting price to come down here. And then when price comes down here, you're expecting that price will bounce and start reversing the opposite direction. And you can see this scenario I have here. That's exactly what happened. So immediately price came down and touched this red line here. My order will be what? Executed. And you can see that as my order was executed, price starts what? Going up, which is exactly what I was expecting. Then for this third scenario here, I was expecting price to come down here and touch here and start going up. But price actually just got here and then started going up. So what does this mean? This means that my trade will not be what? Executed. The same thing with sell limit. I was expecting price to come here and price was going up, going up, going up. And then at this point, price touches that place and start going down, which is exactly what I'm hoping for. Okay. And you can see that my order has now been executed. And then this last scenario here, I'm expecting price to come here, touch here and start going down. But price didn't get here before it started going down. So what happens? My order is not what? Executed. Ajayi says, can it be changed during price movement? Yes, you can still edit your order as long as, so maybe for example, price is still here and I set an order here. And by the time I check back later, I saw that price hasn't still gotten there. Yes, you can still change it at that point. But once your order gets executed, you cannot change it again because you are now already in the trade. All right. So Ajayi, I hope you got that. All right. So Olusmok says this is a strategy on its own. Yes, you can also use this as a strategy, but all right, this is not the strategy I'm teaching you. All right, but I'm just giving you knowledge about it. So if a strategy is coming to your head from it, it's all well and good. You can start using that strategy. All right, but this is not the strategy I'm going to teach you. All right, so let's move on. So let's view it on TradingView. So let me share my TradingView again, once again. So if I was entering a buy stop, what a buy stop simply means is that you can see price is currently here now. You can see this green thing moving up and down. So it means that price is currently at that point. So what it means is that I'm expecting price, okay? I'm expecting price, if I'm setting a buy stop, I'm expecting price to come up as high as this place, for example. All right, meaning that I'm expecting price to come to this red point. So what will I do? The price of this red point is what? 34941. What I'll just do is go to my MT4, enter a buy stop and say my entry price is 34941. All right, meaning that if price never comes to this, let me get arrow. I'm looking for the arrow. So it means that if price never comes here, it means that my buy stop would not be what? Activated. All right. So if price maybe does something like this and start going down, then it means that that order will not be executed. But if price goes like this, goes up, all right, and start going like that, so immediately it touches this price or this line, it will be what? executed, then I expect price to keep on going what? Up. All right. Do we understand that? If you understand what I just showed you now in the trading view, type in 1 in the chat box. All right. Type in 1 in the chat box. Good, 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 good. Awesome. You guys are getting it. You guys are getting it. Awesome, 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 awesome. So that is how you do your buy stop or sell stop. Sell stop example will be, I'm expecting price to come somewhere down here. All right. Maybe I'm expecting price to come somewhere down here. Let me undo that. I'm expecting price to come somewhere down here. So if price never gets down here and touches this, it will not be what? Executed. So that's how you enter your buy and sell stop and your buy limit and sell limit. So, but when price gets here, then my trade will be activated and I expect price to keep going down. All right. So that is how it works. Okay. So don't worry, you get to learn more about trading view as we move on in the training. So let me go back to my slide and let's continue. So the next thing I have here is take profit. Very, very important. Take profit. What is take profit? A take profit order automatically closes an open order when the price reaches a specified threshold. All right? When the price reaches a specified threshold. So let me just quickly go to the diagram. Okay, so before the diagram, let's talk about stop loss too. A stop loss is a limit order in which a trade is closed when a specified price is reached. All right, and I put it down here. Never enter a trade without stop loss. Never enter a trade without stop loss. It is a defense mechanism. All right, it is a defense mechanism. So let me show you on trading view. Let me share my trading view with you again. All right, so now let's assume I enter a buy now. All right, let's assume I enter a buy now. If I enter a buy now, what does that mean? It means that I'm expecting this guy to keep on going up, Abi. If I enter buy now in my MT4, all right. So what happens is that if I expect price to go up, what is take profit? Take profit means that in this trade, I am willing to make. So I'll come to this measure here. So price is currently here. In this trade, let's assume I'm willing to make, 200 pips. All right. So 200 pips is somewhere here. So what do? I can set my take profit here. All right. And then I am willing to only lose, let's assume maybe 50 pips. All right. Or let's say 100 pips. Let's say I'm only willing to lose 100 pips and make 200 pips. So what will happen? Can you see this place I've marked out? This place I've marked out will be my take profit, and this place will be my what? Stop loss. Meaning that when I enter that buy trade at this point, and then price start going up, what will happen in my MT4? I'll be seeing some profits. I'll be seeing things like $5, $10, $20, $30, $70, $100. And if my lot size was 0.1, by the time it gets to this 200 pips, I would have made $200. And what will happen? Immediately price gets to this 200 pips, MT4 will automatically close the trade. All right. And you would have made a profit of $200. So even if price keeps going higher than the 200 pips, all right, even if price keeps going higher than the 200 pips and went as high as 500 pips, all you would have made from the trade is 200 pips, because immediately price got here, MT4 would have automatically closed the trade for you, and it would have put your $200 in your account like that. All right. And that is what you want to do. For every trade you enter, you always want to have a take profit, because that is what will stop you from being greedy. All right. Because some of you say, it's still going up. It's still going up. That's giving you 200 pips. It's still going up. You still say, let me not put take profit. This thing can get to 1,000 pips. Let me make $1,000. And then it's still going up. It passes 200. It gets to 300. And then before you blink your eyes, maybe you just went to go and drink water. And by the time you come back, you notice that you were seeing plus 300 before. You are now seeing minus 150. And you wonder what's going on. You are seeing that because price has actually done its thing, which is moving. Price is always moving, and price can either move up or down. Okay, so that's why you want to set a take profit. So if you are set a take profit, once you hit that 200, it automatically closes you out of the trade, and your $200 is in your account sitting and chilling. All right, and what is stop loss? Let's assume after entering this trade, you know, maybe based on volatility or news or whatever it is, price went up, it didn't get here, and when it got here, it started going down. What does this mean? It means that when price gets here, it automatically closed the trade for you, and all you would have lost out of your $1,000 is $100 if you were using 0.1. Okay, meaning that even if price kept on going down and went down 1,000 pips, what would have happened? You would have, you know, saved yourself from all of those plenty losses with the stop loss that you have entered. Meaning that one price got here, it would have removed you out of the trade, and all you would have just lost is just $100 and nothing more. All right. So your take profit and your stop loss allows you to automate your trade. So it allows you to go and do other things in life. It allows you to just place a trade, leave your phone, and go and do other things. Maybe you are a teacher, you can continue teaching. Maybe you are a businessman, you are selling things. You can go and continue to do all those things. And now you just know that by the time you come back to your phone, maybe 1 hour later, maybe 10 hours later, you will either see $200 profit or you see $100 loss. It's as simple as that. Okay. If you understood what I just explained to you now, type in 5 in the chat box. All right. So Ajayi says that's where the do not be greedy comes in. Yes, yes, yes. I love your teaching ability, sir. Simplicity in all forms. Thank you, IB Cool Media. I really appreciate that. Please, how do I put the line as you did to measure your TP and SL? Sahid, I said I'm going to talk about TradingView on Wednesday, so you understand how I drew the line and everything. All right, so just calm down. Ajayi says automated profit or loss. Good. 5555555. Fantastic. It means you guys understood it well. I understand perfectly now, even though I was in the previous class. Oh, great, Matthias. You know, it's a good thing you joined this class again to understand better. All right. So that is how your take profit and your stop loss is being measured. So let me go back to my slide now. All right. And talk about other things. So let me just talk about market analysis. This is the last thing I want to talk about today, and we'll be done for today. All right. So there are 3 ways to analyze and develop ideas to trade the market. Number 1 is technical analysis. Number 2 is fundamental analysis. And then number 3 is sentiment analysis. All right. Sentiment analysis. Emmanuel is asking, what's the formula for calculating the signal? We've not spoken about any formula or strategy yet. We are still building our foundation. All right. We are still building the foundation. So just follow along with me. So what is technical analysis? It's the study of historical price action in order to identify patterns and determine probabilities of the future direction of price. So I am a technical trader. All right. So who do we call technical traders? We are people that study historical price movement. So we go to the chart and check what has been happening in the chart for a long time. All right. And we've used that to now create a strategy and say, oh, based on what has happened in the past, this is what's going to happen with price at this point. All right. So that's what's called technical analysis. All right. We are just checking the past, levels of prices in the Forex chart, and then we use that to judge. So Forex technical analysis use things like trend lines. We use things like, support and resistance. We use things like, what's it called? Hammerhead. We use things like, price action, wicks, all of those things to help us to know where price is likely to go next, in the market. All right. So that's what technical analysis is. So you can see this chart now. From this now, you can see that price got here, came down. It got here again, it came down. It got here again, and it came down. So as a technical analyst in Forex market, once I see this happen here, come down, see this happen here, come down, see this happen here, come down. By the time price was coming to this place here, I will already know that if price come back here, what I'm just going to do is to what? Sell. Because based on history, I have seen that anytime price is about to break this area here, okay, it will always come down. So based on that, I will use that to enter my trade here, and I would have made a profit if I sold this pair at that point. I would have made a profit at that point. That is what is called technical analysis. All right. If you understand that, type in 5 in the chat box. So actually, this is what we call resistance. This is what we call resistance, and this is what we call support. All right. Anytime price gets to a resistance, which is like a ceiling, it will get there and the resistance will push it back down. And when price gets to a support, what happens? A support is like the floor. When price gets there, there's a power there that will what? Push it up. And that's what's called support and resistance. So support and resistance on its own is also a strategy that you can implement in trading Forex. All right. So you can see that if you're taking good notes here, you can even, out of plus my own strategy, you can create more strategies that you can be using on your own to add to my own strategy and be making plenty times 3 times 2 money of what me I'm even making. All right. Because this support and resistance is actually another strategy that you can use. So what is fundamental analysis? Is a way of looking at the Forex market by analyzing economic, social, and political forces that may affect currency prices. So when it comes to fundamental analysis, what they look at is not historical price on the Forex charts. What they look at is news. All right. So you can see it involves poring over economic data reports. So they look at news. So these are people that will keep on watching CNN, Bloomberg, that will keep on watching the stock market, you know, news and prices and everything. So their own is based on the economy. What is happening to the economy? What is Trump saying? Like all those times when Trump would go and tweet on Twitter, and before you know it, when Trump just posts a tweet on Twitter like this, you don't see that price will just start moving. All right, the USD will start moving and, you know, giving you direction. So this is what fundamental analysts do. They watch the news, they watch, you know, read newspapers, they go to sites like forexfactory.com where they get news that are about to be released. And based on those news that are about to be released, they get ready their trades, whether to buy or sell that currency based on the outcome of the news that came out. So you can, you know, copy this down. Let me type it in the chat box, forexfactory.com. You can go there to get news about currencies, news that are about to come out, and, you know, use that with your fundamental analysis. So I am also a fundamental analyst. All right. So I've been trading for like, you know, 3 years now. So, and, you know, I've learned everything. I've done trainings, I've paid money for training, spent over $500 in training, you know, learning and learning and learning, and everything that me I've learned now, I'm giving you guys for free. Okay. So I've done all of those things. So I know how to use the fundamental, you know, to trade the Forex market. I know how to use the technical to also trade the Forex market. All right. So, but more of the technical analyst is who I am. All right. Than the fundamental. So the fundamental, what they look is if the economy is good, the currency what goes up. If the economy is bad, the currency goes down. So if you look at when the US was having their election and they were unsure who was going to enter, whether Trump would come back, whether it was Joe Biden, at that point, you notice that the US dollar was just what falling. And it was, as it was falling like that, you know, we had some of us that were making plenty money just from that. All right. And then when Joe Biden came and he released his opening speech and all of those things, you will notice that the US dollar started going up because people now had confidence in it that, oh, based on what this guy is saying, I think the economy is going to get better and everything. And then the US dollar went up. Okay, so these are how you analyze the market as a fundamental analyst based on economic data and news. I hope we got that. All right, so if you got that, type in 7 in the chat box. Type in 7 in the chat box if you got that. Okay, so the last one is the sentiment analysis. All right, sentiment analysis. All right, so this is used to gauge how other traders feel, whether it is about the overall currency market or about a particular currency pair. Okay, so that is how you gauge it. Okay, so the sentiment is kind of in between the technical analyst and the fundamental analyst. So what they do is they work with sentiment. They work with their mind or their heart, if I want to put it that way. So it's not really, they're always like, well, it might go here. So they deal with thoughts and opinion. Thoughts and opinion. So me, I'm not a sentimental analyst because I don't deal with thoughts and opinion. All right, this involves my money. I can't be saying, well, I can't be using my thoughts or my opinion. I want to make sure that the chart is telling me that the price is going to go to this direction, or the economic data and news is telling me that price is going to be going in this direction. So I'm not a sentimental analyst. I don't use sentiment. I don't use thoughts and opinions to form my trading. All right. So Joseph says, please, I hope we will get notes too. All right. So the best thing for you is to get the recording for this training. All right. To get the recording for this training. And like I mentioned earlier on, the recording is not going to be free because I'm already giving you the training for free. Okay. So I'm not going to give you the recording for free also. So if you want the recording, for those of you that are joining me on Zoom here and you want the recording, I'm going to give it to you for just 5,000 naira. All right. Even though we plan to sell it for 20,000 naira for those that just ask us for the recording and are not part of this class. All right. So I've just posted in the chat box right now, what to do and where to make your payments to. All right. And once you receive your payment, you can send me a message on WhatsApp and I'll send you the recording for this class. Okay. So that is that. Okay. So which one is the best? All right. So there's actually no best. It actually depends on the trader. So throughout your journey as an aspiring trader, you will find strong advocates for each type of analysis. All right. So if you find a fundamental analyst, he will tell you all the reason in this world why fundamental analysis is the best. And if you come across a technical trader, it will give you all the reason in this world why technical trading is the best. All right. So at the end of the day, you should trade based on the type of analysis you are most comfortable and profitable. Very important. Let me highlight it. Profitable. Profitable. That's the word. So whichever analysis that you are comfortable with and profitable with. All right. So the strategy I'm going to be teaching you is going to be on technical analysis. All right. And definitely it's going to be profitable. It's a out of 10 trades, it's sure that you always win 7. All right. Out of 10 trades, it's sure that you always win 7. That's how good that strategy is. And that's how I'm confident in it. And I'm teaching you guys right here. And I'm giving you for free. All right. If you're excited about that, drop in a 777 in the chat box. Drop in a 777 in the chat box. If you're excited about that, drop in a 777 in the chat box. Awesome, 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 awesome. Great, 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 great. Great, great, great. I can see the 7 rolling in. Awesome, awesome. So now it is time for questions and answer. So if you have any question for me based on what we have discussed this morning, it's time for you to ask me. All right. So I'm going to answer your question. Okay. So drop your questions in the chat box. So while your questions are coming in, I have a question for you. So question number 1 is, in this currency pair, USD JPY, which of this currency above is the base currency and which one is the quote currency? All right. So if you have questions, drop it. And then those of you that don't have questions, start giving me the answer right now. Which one is the base currency? Which one is the quote currency? All right, Ekundayo says USD is the base currency. Fantastic. All right, it's only Ekundayo that has answered me. Oh. The rest, have you forgotten? Okay, great, great. I'm seeing more answers now. Matthias says USD is base. All right. Oluzmok says USD. You know, IB Cole Media says USD base. JPY quote. Fantastic. You guys are, you know, you are awesome students. Very, very good students. So question number 2, GBP AUD. This is the current price of GBP AUD. So, and this is the current price of Euro JPY. This is the current price of New Zealand USD. So my question is, identify the PIP digit and pipette digit above. So out of all of these digits here, tell me the one that is pipette, tell me the one that is PIP. So you say, number 1, PIP is this, pipette is this. Number 2, PIP is equals to this, pipette is equals to this. Number 3, PIP is equals to this value, pipette is equals to this value. All right. So Babatunde says GBP AUD 3 is PIP, 4 is pipette. Round of applause for yourself, Babatunde. All right. PIP is 3, pipette is 4. Awesome, awesome. The PIP is 3, pipette is 4. Great, 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 great. Awesome, 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 awesome. You guys are doing well. You are doing well. You are doing well. You are doing well. You are doing well. All right. You are doing well. You are doing well. Okay. You are doing well. Awesome. Awesome. So somebody has not given me for New Zealand USD. Waiting for New Zealand USD. PIP is 7, pipette is 5. Yes, that's for you, Euro JPY. That's right, Alexander. All right. Great, 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 great. Great, great. I'm waiting for New Zealand USD. New Zealand USD. New Zealand USD. 3 is PIP, while 4 is pipette. Somebody is still doing GBP AUD. Yes, you are correct for GBP AUD. I'm waiting for this number 3, the last one, New Zealand USD. Which one is the PIP? Which one is the pipette? Come on, guys. Come on, guys. Come on, guys. One is PIP, 3 is pipette. Great, 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 great. A round of applause for you guys. A round of applause for you guys. A round of applause for you guys. So question number 3. Question number 3 is calculate the amount of pips in difference below. So look at this GBP AUD. Price went from this to this. Who can tell me what's the pip? What's the pips in difference between this and this? So if you need to grab up your calculator, grab up your calculator. If you are very good in math, you can just use your eyes to quickly see the difference. Okay, what's the difference? What's the difference? What's the difference? GBP AUD, what's the difference in pips? In pips, in pips, in pips. Oh, I'm seeing 300 pips. I'm seeing 300 pips. Okay, that is actually wrong. All right, let me see if somebody will drop in the right answer. In pips, 300 pips is wrong. 200 pips is wrong. Yes, Alexander, a round of applause for yourself. 30 pips. 30 pips. Akimbola is it minus 300? Akimbola is not minus 300 though. Whether it's minus, whether it's plus, what I just want is the difference in pips. All right, and the answer is 30 pips. All right, why is it 30 pips? Remember, this is pipette. This 4 year and this 4 year is pipette. All right, it's like kobo. So I'm not asking you that what is the difference in pipette. If I ask the in pipette, then you could have said 300 pipettes. Are you getting that? When you convert that to pips, that will give you 30 pips. So I said in pips. So if I say in pips, you want to make sure that you ignore the word pipettes. All right. So if I tell you that what's the difference between 1,000 naira and 500 naira, all right, or if I say what's the difference between 1,000, 50 kobo, and 550 kobo. You're not going to be saying the difference is you now add the kobo to it and say, everything like that. All right. You want to ignore the kobo at that point and focus only on the naira. The same thing here. You want to ignore the pipet and focus only on the what? Pips. In short, by the time I start showing you how to place trade and calculate your stop loss and everything, when it comes to trading live, we actually ignore the pipets totally. We don't even look at it. All right. You just ignore it and look at it as if it's not there. All right. So that is the way it works. So if you understand now, type in 5 in the chat box. Type in 5 in the chat box. Great. Awesome. 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 And if today's training has been of massive value to you, I want you to locate the fire emoji in the chat box. Locate the fire emoji on your phone and drop it in the chat box right now. I want the chat box to go on fire. Look for the fire emoji and drop it in the chat box. I want the chat box to go on fire right now. If you know you've gained massive value from just this day one, type in the fire emoji in the chat box right now. Wow, the chat box is going on fire, fire. Awesome, 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 awesome. You guys are doing well. Olusmog has blown everywhere up. Francis, you too. Francis has pulled fire everywhere. Fire. Great, 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 great. All right. Thank you so much, guys. Babatunde says you're too good, boss. K. Thank you, Babatunde. I'm really grateful for your acknowledgement. Thank you guys for joining the training. Now, what are we doing tomorrow? So tomorrow, you don't want to miss tomorrow's class. Okay, you don't want to miss tomorrow's class. Tomorrow, we're going to be talking about the Forex broker to use. We're going to be talking about the trading application to use. We're going to be talking about how to place a trade. We're going to be talking about the Forex chart and what you need to know about the Forex chart. All right. So that is what we are going to be doing tomorrow. You want to make sure that you invite everyone. If you know that this training was of value to you, you want to make sure that you post this on your status, you post it everywhere on Facebook. You know, you want to make sure that you bring in as many people as you can to this training. Why? I'm doing this training for free. So if I'm doing it for free, I'll be so happy if I'm impacting a lot of people at the same time. All right. I'll be so happy if I'm impacting a lot of people at the same time. That is why I want you to share this with everyone in your contact list, on your WhatsApp status, your Facebook status, you know, on your Facebook post, your wall, your Instagram wall, everywhere you can share it. If you promise to share this with, you know, on your social media, you know, blast everywhere and bring in people here for tomorrow's class, type in 5 in the chat box. Let me know, my people. Type in 5 in the chat box. And I just dropped in the flyer for the training in the chat box. You can download it if you want to use the flyer to make the publicity. Thank you so much, Ajayi. Thank you, Francis. Thank you, Olusmog. Thank you, Saeed. Thank you, IB Co Media. Thank you, guys. Thank you, guys. Tomorrow's training starts by 4 p.m. Nigerian time. So we started 4 p.m. today also. All right. So it starts 4 p.m. Nigerian time tomorrow. You don't want to miss it. You can download the flyer. Just scroll up a little bit. You'll see the Forex Made Easy flyer that I just sent to the group. Download it and share it with as many people as you can. I will promote to unexpected level. Thank you so much, Saeed. I am so waiting, you know, to see the way you're going to promote this. Please share it on everywhere you can share it. That's why I'm giving you the flyer. So if you want to post on Instagram, you have something to post on. I mean, I want this room to be filled up tomorrow. All right. I want this to be filled up tomorrow so that the person that you bring in will say, by the time the person is saying his story, the person will mention you in his story that, thank God for Saeed. It was Saeed that made me find out about this training. Thank God for Akimbola. Thank God for Alexander. Thank God for James. Thank God for, you know, Godwin, for Sai, thank God for Olusmog, for Francis, for Ajayi, thank God for Olua Sai, Ekundayo. I mean, people will thank God for you that, you know, they knew you just because you invited them to this training. All right. Thank you so much. Thank you so much. Ajayi says, thanks a lot, Kesho. I'm intrigued. It's Ajayi Oluwase. Wow. Oh, what's up, Slim? How you doing? Good to have you here. So please, guys, bring in everyone that you can bring into this training tomorrow, and I'll see you guys tomorrow. I'm signing out. Bye for now. See you guys tomorrow.